Alright, we are going to get into Chapter 16. In Chapter 16, we're going to talk all about financial statements and closing entries for a corporation. We're sort of winding down in our study of corporations. We've got 5 learning objectives this chapter, so it's going to take a little bit longer for us to get through. First of all, we're going to learn how to prepare an income statement for a merchandising business organized as a corporation. So we're going to work on income statements. Then a statement of stockholders' equity, then a balance sheet for a business organized as a corporation. Next, preparing closing entries, and then a post-closing trial balance. So lots to do this chapter. And let's get right into it. So today it's just the income statement for our corporation of 3 Green Industries. The uses of financial statements. So a corporation prepares an income statement and a balance sheet similar to those used by a proprietorship. A corporation also prepares a statement of stockholders' equity. So the stockholders' equity is the one difference from the proprietorship when we talked about Delgado Web Services. So basically, financial statements provide the primary source of information needed by owners and managers to make decisions on the future activity of a business. The financial statements should provide information about a business's current financial condition, changes from its previously reported financial condition, and the progress of its operation. And then, like we said, the corporation prepares the stockholders' equity, which we're not doing in this section, but that's the difference between a proprietorship and a corporation. Here is our income statement from a trial balance. So the things I want to point out, we've got 4 main sections. The operating revenue right there. The cost of merchandise sold right here. The operating expenses right here. And lastly, other revenue right here. Those are our 4 main sections. And those are the ones that stand out a little bit. They're tabbed to the left. They're not tabbed at all. Operating expenses, cost of merchandise sold, operating expenses, and then other revenue. Those are what we're going to focus on. This income statement differs from Delgado Web Services income statement from Chapter 7. 3 Green has more accounts to report on its income statement, and the operating revenue section is more detailed than the revenue section in Delgado's income statement. So 3 Green's income statement includes sections for cost of merchandise sold and other revenue, which is different. Operating revenue section is what would be starting first. So the revenue earned by a business from its normal business operations is called operating revenue. The operating revenue section of the income statement lists the sales account and its contra accounts, sales discount and sales returns, and allowances. The amount of sales less the sales discounts and sales returns and allowances are called net sales. So to get into the operating revenue, first we write the income statement heading on 3 lines. 3 Green Products, income statement for year ended. Then we write operating revenue. And then we write sales. Tab it in a little bit and write sales. Okay, write the amount of sales, which will be given to you, in the 3rd column. So operating revenue, the amount of sales goes in the 3rd column. Notice there are no titles here. You just have to either look at your template or remember. And then we do less the sales discount and sales returns and allowances. So the sales discount is on the 2nd column, and then the sales returns and allowances below that. Add these 2 up and put it here. Okay? And then the net sales will be the sales minus or less the sales discount and sales returns and allowances. This goes here. And the percent of net sales is 100%. And we're going to step through each one of these things. Apologize. There we go. Okay, so the cost of merchandise sold section of an income statement for a merchandising business. The original price of all merchandise sold during a fiscal period is called the cost of merchandise sold. The cost of merchandise sold is also known as cost of goods sold or cost of sales. The operating revenue remaining after the cost of merchandise sold has been deducted is called gross profit. So gross profit is often referred to as gross profit on sales. Management uses gross profit as a measure for how effectively the business is performing in its primary functions of buying and selling merchandise. Calculating a ratio between gross profit and net sales enables management to compare its performance prior to fiscal periods. So that percent of net sales is going to be important to calculate, which is right here. So let's step through what we're doing here. We're going to write the cost of merchandise sold at the extreme left, and then we're going to talk about inventory. So the beginning inventory, we have merchandise inventory on January 1st, and you would be given that amount. And then, underneath that, we're going to write the purchases subsection right here. So purchases, everything you've purchased since January 1st, less your discount and your purchases, returns, and allowances. Add these two items up, write them here, and then subtract these two items and write them there. Okay? Alright, next. Make sure I hit everything here. Calculate the total cost of merchandise for sale. Sorry. Yeah, there we are. Total cost of merchandise for sale would be your merchandise inventory plus your net purchases. Gets added and written right here. And then the less merchandise inventory, so you take inventory at the end of the year, you fill in that value of your inventory and then do some subtraction, and it comes into the fourth column. So that would be your cost of merchandise sold, which would be totaled here. And then your gross profit would be your merchandise inventory. Let me make sure I get the gross profit, total operating revenue, operating revenue, which is right here, less the cost of merchandise sold. So $626,000 minus $258,000 would be your gross profit. Okay, you can rewind that if you need a refresher. Then we need to do our vertical analysis, figure out the percentages. So 100% right here is divide each amount in the fourth column by the amount of net sales. So our net sales is $626,781.99. Divide that by that and you get 100. You get 1 times 100 is 100%. 258 divide by 626 with all the other numbers would give you 0.412 multiplied by 100, and you have 41.2%. And then you can either subtract that from 100 to get 58.8, or take $368,699.44, divide by 626,000 and the rest, and get your vertical analysis. This is important for a business because it wants to know if its gross profit is a high enough percent of sales. Alright, cost of merchandise sold section. We already did that. Total of adjacent. That was weird. I think that's in the wrong spot. We already did that and I talked you through it, so I think we're good. Total of adjacent column. Oh, that's really odd. So, completing an income statement for a merchandising business. The expenses incurred by a business in its normal operations are called operating expenses. The operating revenue remaining after the cost of merchandise sold and operating expenses have been deducted is called income from operations. So income from operations is also referred to as operating income. Businesses often earn income unrelated to their normal business operations. One example is interest earned on invested or loaned funds. On the income statement, interest income is presented after income from operations in a section labeled Other Revenue. So it's important to account for other revenue, but it needs to be listed out separately. So you can account for it separately. So let's step through these. To prepare an operating expenses section, first we're going to write operating expenses all the way to the left. And then we're going to indent a little bit and list all of the expense account titles, one per line in the order in which they appear on the trial balance. Then write the amount of each expense account balance in the third column. Sorry, there we go. Oh, back it up. So, yep, so we're going to all of the account titles from our trial balance, and then all of the values in the third column. The amount of each expense account balance in the third column. And then we're going to write total operating expenses. Nope. Total operating expenses, add all of these up, and write it in the fourth column. Then the income from operations. So the income from operations would be your gross profit, $386,699.44, less the total operating expenses, $265,737.47. So subtract those two, and you have your income from operations. And I will have to finish this later. Alright, the bell has now finished ringing. So let's finish this up. So we just did income from operations. Let me get to my place. Next, other revenue section. So in our other revenue, we indent and we need to write down interest income. Oh, and it doesn't go through that. Interest income. So we have the amount for interest income in that fourth column, and it is revenue, so it will get added in as we get there. Oh, yeah, so yeah, other revenue, interest income, and then net income before federal tax. So add those together, and we get net income before federal income tax. It is the income from operations plus other revenue. So we need to figure out how much federal income tax there is. So we're going to write down less federal income tax expense on the next line, and the amount of $23,622 on the fourth amount column. And then once you subtract those, net income after federal income tax, subtract the 103, subtract 22,000 from the 103,000, and we get our net income after federal income tax. So then we're going to rule double line at the end, and that shows that we are done after we do the vertical analysis. So the vertical analysis is divide each amount in the fourth column by the amount of net sales. So we have our net sales. Looking for it. It might be above. Let me see if I can go back and get it really quick. I'm going to look in the book really quick. Yep, our net sales is from the operating revenue section, so it's above all of this. Oops. So we would take each thing and divide out by net sales to get the percent, the vertical analysis percent. All right, we're going to practice all of this in our work together. Audit your understanding. What is the major difference between the income statements for a merchandising business and service business? The cost of merchandise sold section. How is the cost of merchandise sold calculated? So the beginning inventory, January 1, plus any purchases equals the total cost of merchandise available for sale. And then you take inventory again on December 31st, so you subtract that out, and that's the cost of merchandise sold. Why is interest income presented in a section other than operating revenue? Because sometimes as a company we make, sorry, got distracted. Why is interest income presented in a section other than operating revenue? If you remember, a company can make money in other ways than just selling their merchandise. We have interest earned or on notes receivable is not a normal operating activity. And that's it.